Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, August 25th, 2016. I'm starting this video, it's a little after 11 o'clock Eastern Time, and wanted to do an update on the mining sector, gold, silver, and the gold and silver mining stocks. All right, we'll start out here with the charts of gold. I put up some static charts this morning, so of course you can reference those on the site. This is a pretty decent support level. You can see the reactions here, and we're still shy of that level, so I do expect more downside in gold and silver and the mining stocks. I think this bounce, as I mentioned, snapback rally, the odds of that were pretty sharp. We've had a pretty good move down, so when you get close to support, and more importantly, what I want to do in this video is kind of take you through some of the holdings. Because as I often say, if you're trading gold or you're trading GDX or any of the miners, individual miners, uh, I think you'd be remiss not to take everything into consideration. Gold and silver are so related, and a lot of these mining companies pull both metals out of the ground. So you want to watch gold, you want to watch silver, you want to watch GDX and SIL, which is a silver miners ETF. And ideally, especially the big components, because you have just a handful. I won't go through all the stocks today, but I want to go through some of the top components of GDX and take a look at the charts and see what we're looking at here. So there it is. There's support levels right there. It's around 125 on gold, and you can see, I should draw it out here, there's some pretty decent resistance that was former support right up here. So we may bounce back. Remember, this was a pretty decent move. There's still a plethora of gold bugs out there, people just dying to get in to the gold trade. Everyone wants to, chase what's hot. Nobody wanted to buy gold down here, but everyone wants to buy it up here. That's just how it works. So you might get these, you'll have these snapback rallies where people who've been waiting to get in for a while. But I don't think this one, I think it'll be somewhat fleeting because we've already had a consolidation period, and that's where a lot of shares have changed hands. There was probably a lot of distribution among institutional and smart money into the hands of the general public, aka dumb money. No offense, I'm general public as well, so please don't take offense to that. But I'm just referring to professional or institutional traders versus the retail public. So that's what they refer to it as. There's my targets. There's a possible bounce back, but if I mentioned in the post today, you have to define your trading plan. If you're not a nimble, active trader, and you believe that gold is going down further, especially the mining stocks. I'm not trading gold and silver. I trade the miners because it's a leveraged play, as I always say. If gold drops 5%, the miners are going to drop 10, 15 or more, and vice versa. So you get more bang for your buck trading the miners. And but with that being said, they will follow the metals, so you want to keep an eye on the charts. And there it is. So I see a little more downside, and that would be my minimum target. Some have asked, where to get in if I want to get in long. That may be it. That may be all it takes, but I'm looking at long-standing divergences. We had this divergence back here. Excuse me, and we did catch that, and that was a significant correction there, a big drop in gold, and that was on a considerably smaller divergence. Take the vertical line up, and you'll see where I'm talking about, where we had the divergent high right up here and a big drop. So this is only larger divergence, larger in scope and time, and it portends a potentially larger correction down to here. It wouldn't shock me to see gold come all the way down back to that 115. That was that former target that was hit on that last pullback. But I don't want to get that far ahead of myself right now. I just have to watch this, see how it unfolds. And so there's where we're at. I had a few questions. Hey, do I add to a position? Do I cover a position? We're in no man's land right now, at least on the metal. And again, I'm going to give you a comprehensive look here and look at some of these names. Try to keep this relatively brief. But no man's land is what I refer to. It's sort of, if you play tennis, it's like playing in the middle of the court. Either, you either rush the net or you play in the back of the court. This is the same case here with trading. You're right between resistance and support on gold, so not a very objective area to enter. And let's take a look at the 60-minute chart. Enough on that daily. One thing I look for during a strong trend is bullish divergence. We don't have that yet. We have about an equal low on the MACD, but yet prices haven't made a lower low. So we've broken down from this triangle pattern defined by this line and this trend line. There's a symmetrical triangle pattern. This was an uptrend line right here that we broke, back tested, and rolled over. And just, eyeballing this chart, there's that level as well. I think that's, call it roughly 125, 125.10. That's my minimum downside target for gold, and I think we'll get there. And quite possibly more. We'll see. Let's take a look at silver. All right, this is silver. There's that gap I pointed out the other day. The bigger picture was this bearish rising wedge. Very clean, very well defined. I mentioned, made it pretty clear that I was more bearish on the silver mining stocks than I was on the gold mining stocks. Saw more opportunity there, and we've had some great trades. Both, we had a couple official trades, but a ton of unofficial trades. And you guys remember, when I did the video, and I talk about this a lot, the difference of these unofficial and official trades, well, typically the official trades are those I have the highest confidence in, but there's also a case like when I did the overview on the sector, the mining sector, and unlike some other sectors, which you have a little more diversity in what the business model of the companies, in the mining sector, there's a very high correlation. In other words, birds of a feather flock together. When one goes down, they all go down for the most part, and I'm talking very few exceptions. So when you get a call right, if you're looking at a drop in GDX of 10% or a rise, I can almost assure you that 90% or so of the components, if not more, will go up or down along with it. So my point here is I covered so many stocks in the video the other day, beautiful setups, but I can't put them all as official trade ideas because that is a tremendous amount of work, because official trade ideas, I will always list specific entry criteria, specific, our suggested stops, suggested price targets. I do follow-up posts as targets are hit, and no matter what, win or lose, all official trades receive a final post once either the final target is hit or the trade has been stopped out. In other words, so they can be moved from the completed or the active trades category into the completed trade category, and then I have to reassign all the posts that were associated with that trade as completed trades, so they can be archived indefinitely for future reference. That's the best way to really track the performance on the site. It's also a useful tool to go back and look at the trading history. You can go back for years on any stock, ETF, see how that's traded with various chart patterns, see how my calls have been on those trades. And so again, when I went through dozens of stocks the other day, I can't possibly put more than a handful on as official trade ideas, in addition to everything else out there. Semiconductor stocks. I have other trades in other categories, and a lot of sectors I follow. So I wanted to share that. So take what you like out of these videos, replicate the charts, and as I always say, if you have any questions, you want a little more detail on a stock or an ETF that I covered in a video that's not an official trade, or I haven't posted an update in a while, just drop me a line and I will be more than glad to update that. So with that being said, here's silver. We came, perfect technical analysis. You see that gap I pointed out here. You can see the high right there. It was 1790. If you look at the box in the upper left-hand corner, that's the bottom of the gap. And you can see right there, look at that low on that day of 1790 when it hit the gap, the following day low of 1791. So for those of you that don't believe in technical analysis and how it works, this is just a beautiful example. We came down, closed above the gap. The top of a gap is support, and we had a couple levels where we came close to that. We closed right there, hit the top of the gap, and then gapped down into it, found support at the bottom of the gap. The next day we gapped down and broke down below. So now my point being here, folks, this is that further validates the fact we had two reactions off that level, and they don't have to be to the exact penny. They happen to be, exact cent there and a penny off. Within a few pennies is really all that matters, or within, I should say, within a percentage point or so. And so now 1790, former resistance then becomes support. So this is what you're looking at on silver. Now, there was a lot of hot air to be released out of here, so it wouldn't shock me at all to see silver continue down. I should really put a different level here. There's a gap right there. I had 1710 as the next support level, but I would be remiss not to point out the top of that gap. It's around 1729, so that's really a support zone. So there's a possibility there. that we go continue on down, but we may want to come back in. I'm sort of leaning towards maybe a back test or a near back test of the bottom of that gap there, the 1790 level, and probably more so. I think we'd fall shy of it. So if you look at yesterday's high on silver, it was 1778. We probably wouldn't go much higher than that. But there's your resistance zone, if you will. So that would be an objective shorting area. Again, right now, not very objective to add on to any positions. If you're holding out for a swing trade for more downside, which I am doing, or you can ride out any bumps and counter trend bounces and then try to get the bigger move. But again, if you were going for the quick trade, we hit, we had one of our trades, at least one hit a profit target yesterday, and silver, which I'll get to here in a second, or SIL, I should say, the silver ETF. Let's get on that. But before we leave silver, the silver metal ETF, I'll point out here there's not anything remotely close to bullish divergence on the 60-minute chart yet, so I'm not overly concerned. I think at best, like I said, we come back and maybe back test this resistance zone. Could we get in the gap? Possibly. And if we do, I don't expect a gap backfill. But, the way technical analysis works, these are your resistance levels. This one here, 1780, then the 1790 level. Then you have this previous reaction high around 1809 that's about halfway into the gap, then the top of the gap. Is each as well. I don't see any technical damage done to the bearish case, and unless we enter this gap, then it puts me on alert that, hey, maybe this was all we needed to let out the steam here in silver. And if we especially backfilled the gap and moved higher, that would start helping the bullish case, just telling us there's a lot of tremendous bid and a lot of money wanting back into silver stocks, or the silver metal. And of course, then like I said, the miners will follow. So let's just jump into those. I'll start out here. I was going to start with the SIL, but let's look at GDX for a second. A lot of you like to trade nugget and dust. Okay, this was a support zone here we fell just shy of. So this morning, like I said, we were in no man's land, and that's why I didn't think it was prudent to add to any short positions. And we bounced back. I have a line here. I'll give you that number. It's 2772. I pointed this out in the trading room. That is resistance, and we're right about there. Again, you don't have to be there to the exact cent. We're at 2777 right now. You can see these reactions. This is why I have that number. We had a gap here, the bottom of that gap. We had a reaction high, and then a gap. So there's gap resistance, if you will. That candlestick body right there closed right on that line. And so now, from just a GDX perspective alone, if I were in a vacuum trading GDX, and I can say this, that that's resistance, and that is an objective area at this point to add back or initiate some short exposure. However, I'll also point out as I get into the individual components, it'll help firm this case up. Yesterday we had that big candlestick, so I can see the possibility that we come all the way back up here. That's about 2866 to be exact. The high yesterday was 2865, and that would be the upper end of the bounce range. So one idea, since the miners are so volatile, let's just assume you didn't have any short exposure or you closed it all out yesterday. You start scaling in here. This is the first resistance level. You add a quarter or half a position and taking it up to a full position when you get there. And with your stops not too far above. And again, based on your, stops should always be based on your risk reward ratio. If you're targeting down here, that's a drop of, let's say, 16% on GDX, well, you can certainly allow, in that case, a 5% stop loss order, and that would put you just above that level. That would keep you within that 3-to-1 or risk to reward ratio that I like. All right, let's dig down in a few components, and this is what helps kind of firm this up. These are the leading stocks. I'm looking at my component list. This is GDX right here, and I've sorted these components by market cap. This isn't necessarily the same order that they're weighted in, but it'll be very close. These will certainly be within the top 5 or top 10 components here because, again, I'm weighting these by market cap. GDX might have a different a different weighting based on some other metric other than pure market cap. Sometimes you use a float adjusted cap weighting. I'm not sure what GDX's selection criteria is, but either way, Barrick is one of the big ones, and 23, almost 23.5 billion. So there's Barrick. You can look if you see that gap right here. I just put that line at. That's right where Barrick, right about where Barrick found support yesterday, which was logical. And if it takes that out, there's the bottom of the gap right there, and then you have these reactions right here. I really need to update this. We're not trading Barrick as an official trade idea, but that would be the next downside target, I think around 1632. But until then, we hit that gap, the top of that gap, and you can see if we zoom into Barrick a little bit here, we have quite a few reactions on this horizontal line here. That is at 1918, and then the yesterday's highs. Um, it would be the upper end of a bounce target for Barrick, and that's why that kind of meshes, and so will some of these gold mining stocks as we get into these individual miners. The higher bounce target that I had, or the upper end bounce target for GDX. Remember, this is support. This is where I think it's objective, but we're starting to move on through that as I do this video. So that would be my upper end, that 2866, and where it's still objective to add on. And then after that, it starts to diminish the bearish case. And I would just say, easiest way for me to say this is don't add on. You can scale into a position if you intended to do so ahead of time. However, you don't want to continue to add beyond that point, or at least I wouldn't, because you're digging yourself into a hole. The bearish case starts to diminish, and there's no point in averaging down. Most professional traders will average up on a position, meaning as it becomes profitable, they'll add at higher and higher prices. Unlike the retail trader that tends to want to average down on a losing position to lower their cost basis, and they end up getting dug deeper in a hole if that trade doesn't turn around and go their way. So there's Barrick at support, bouncing a little bit, and I give you the upside targets. And we'll just do a few more. I won't do all of these. Newmont still fell shy of its downside target. We had a reaction high, let's see, a reaction low right there, previous reaction low, which it fell shy of. So it looks like more downside if it bounces. And again, you take these all collectively, look at these top components, and you'll probably notice that if GDX hits that upper bounce target that I have, you'll see Newmont doing the same, and Barrick. And then here's GG, Gold Corp. Perfect tag. The technicals are working well, and that's what happens, especially in quick sell-offs, whether it's the mining stocks, whether it's the stock market. Some people will say, oh, technical analysis doesn't work anymore, or doesn't work all the time. I can tell you it works best in very powerful sell-offs as well as upside rips in the market. That's what it just seems that traders, even those that might not normally employ technical analysis as their primary tool, they might be fundamental investors, they tend to, at least it seems that way to me, really focus on these levels during powerful sell-offs, because fundamentals are thrown out the door when you see something in a powerful downdraft. People are looking for support levels to buy. So that's what happened with GG. You can see right around, it came a little bit overshot just by a hair, that previous reaction, but you have reactions here. These are trend lines I probably had on the chart before. You can see reaction high, reactions from below, reactions from below, reactions from above, reactions from above, and that's where it found support. So it's bouncing, and now you can see, I should actually raise this. There's your next key resistance, because you have all these reactions. You have a gap right here, reactions. So again, these kind of all line up is what I'm getting at with that GDX upper level bounce target. Now, because there was a lot of bullish sentiment and probably very little short interest in the mining stocks, it wouldn't surprise me to see these fall shy of that bounce target, so I'm on guard for anything. And the first sign would be a reversal and a move back down below yesterday's lows. That would be pretty bearish for the mining stocks. All right, a couple more and we'll stop there. I'm just going down the line again in order of market cap, FNV, and again, just beautiful technical analysis. Here's a line that's been on this chart for a while. You can see I had this line on here for at least a couple weeks, and it defines all these reactions here from above, reactions from below, and that's right where, you know, we kissed it to the penny yesterday. And then we opened up again today. You know, we opened up low and we're bouncing. And like most things, yesterday's highs would certainly be resistance, and then you have a little bit more another resistance level, pretty nice resistance level as well. If you look, take that horizontal line, go across, you can see it captures a lot of lows right here, and that's at 76.42. All right, let's get away from those for a second, and let's look at some of the silver stocks. HL, that was an official trade idea, still is. Hit the first target yesterday. I know that some of you were able to book profits. Congratulations. And you know, like everything else, it will bounce in sympathy with the sector, with the mining stocks, and it has today so far. Um, you know, an objective add-on or new entry for those of you that didn't take it, or those of you that closed out, would be a bounce back to, and I wouldn't wait for a bounce all the way up to that level. And also keep in mind that I put my targets actually a little bit, on short trades, they're a little bit above the actual resistance or support level. So the support there was 630. The support there was 559. I had the target at 569 because I like to do that to make sure I don't miss a fill should the stock reverse just shy of support if too many eyes are watching it. That's sometimes the case. But this one looks pretty good to me to go down to this final target, and I'm riding this one out. I'm riding out any bounces, and T3 at 487, the actual support levels at 474. That would be my final target as of now. Reason why I think we're going there, you can see this is a very steep, powerful rising wedge pattern, an extremely well-defined uptrend line, clear bearish divergences at the highs, and you know, just this doesn't always work, but one of the measurements, you can take the widest point of a wedge, like I'm doing here, and add that to the point of the breakdown, and that's your measured target. And you can see I didn't put that there because of that. I will take into account pattern measurements when I'm setting my targets, but then I always look at support and resistance levels. You can look at my volume up price histogram bar, see this long bar here, that's support. There's a thin zone there. So once we break those lows, it's probably going to be a quick move down. And I can tell you with confidence, no matter what's going on in the sector, I will be covering my full position at that point and possibly reversing long. I had a question put to me today, Randy, where is it a good time to go long, you know, the miners yet? I don't think so. I think there's more to come here. And if that changes, I'll let you know. But right now, that's what I'm looking at, more downside. So there's HL. Another one that I have and really like is CD. I went over these in the videos. CD had had support right there, which it pretty much found. And I'll tell you, you can look at the volume price histogram. It's thin all the way down to this point. That's where the bars come in. I don't see a lot of support there, but I think that would be an ideal target. And this one could head down to this previous reaction low. This would be my ultimate downside target right there. But again, I trade these with an eye on the overall sector, what everything else is doing. A couple more. AG. First Majestic Silver. As I said, the silver stocks by far stood out to me, and you can see the moves down. Here's a 32% drop. You know, that's where I think a lot of the most meat on the bone is compared to the gold stocks. And here's a gold stock here. There's so many. Let's see, which ones did I have? It's official ideas. I'm trying to remember. SBGL. There's SBGL's one of the official trade ideas. Looks like this one just missed. I might have been a little aggressive with the stop. I had the horizontal support and at 1660, and I put my target just 6 cents above, and that one happened to reverse yesterday at hit a low of 1687. So we fell a little shy. I still have, you know, confidence that that target will be hit, and this is a potential target. And if I haven't made this clear lately, I have in the past. When I list potential T3, T2, any potential targets, that means it's not at that point in time. It's not the current target, and you know, I need to actually revise that if I'm going to do so soon. I haven't revised it yet. So what that means is this is still the final target for now. This can be taken in one of two ways. If you're very bearish on the sector and think there's more downside, well, that's you know, an ultimate long-term target, a great final target, where I would tell you that if SBGL got down there and the gold sector and the metals themselves were confirming, that would be a great long entry. But we may not get there. We may not. And I may or may not extend that officially. But if we do break that level, this support level here, that's 1660, I can certainly see some support right here, a reaction there around 1350, but ultimately that would be the final target down there around 1136. And let's see if I had any others that I wanted to cover. No, that's it. It gives you the gist of what I wanted to say, that here we are getting a little bounce today, and I think that bounce will either run its course right now as I'm doing this video, right about where we are. We're just a little bit over that that 27. There we go, back down there now, 27.72. So we're back below it. So I can tell you that if I didn't have a short position already in Nugget, which I do, I would be shorting it here, and I would be leaving a little room to scale in there, possibly with a stop not too far above, and a swing target right now. Yeah, I don't have definitive final targets, but I think we can, you know, go down to, let's say, at least $25 on GDX. And most of you know I always use the one-time chart of a sector ETF versus those leveraged ETFs, because they're the price distortions. Here's GDX. Give you an example. Look at Nugget. Looks okay there. Let's go to a longer-term chart. You'll probably see more of the difference. So there's Nugget going back to 2011, early 2011. Now we look at GDX, and we go back to 2011 there. You can see the difference. GDX is only from the highs here down about 53%, whereas Nugget over that same time period is down about 99%. Okay, this is a log scaling chart. If you put it arithmetic, there's Nugget over the same time period. You can see that's the decay. That's the stuff I'm talking about. That's why over time, and I had to go out to a longer term chart to really show that, you know, clearly show you the difference, that the decay will just wipe out these 3-time leverage ETFs completely. They're not buy and hold investment, awful buy and hold investments. They're just used as short-term trading vehicles. So let's go back to that log chart. All right, I'll wrap it up here. This has been Randy Finney with the right side of the chart, and like I said, I'll continue to share any updates that I see within the trading room. Any major changes or anything that stands out, I'll post that on the front page.